All right, everybody, how we doing? Can you see my screen and hear me? Sean, how are you, brother? Kenneth, what's up? Kevin, hey. All right, loud and clear. Good, good. All right. Hope everybody's doing okay. So, I was off last week. We're gonna get caught up on some stuff that's going on, and I'm a little rough tonight. My whole family has COVID, man. So we're coming to the tail end of it, but I'm hanging in there, man. I should be okay. Everything's good on this end. Hope you guys are all well, doing okay. All right, want to welcome some new guys in. Hope you made it tonight. Okay, 12 weeks. It's almost over. Quarter's running. All right, so here's some ideas to apply. Listen, if you blew this quarter, it's okay, man. Doesn't matter. Just reset, start now, leading into the next one. Maybe give yourself a 14 or 15 week next cycle, which starts April 1st. So you could reset now and have some momentum going into April 1st. The bottom line is you just got to do it. You got to set yourself up, map out a plan, and execute it. And that seems to be the hardest thing, right? But once you get going and form the habits, it's easy to do. All right, so just some ideas. I was thinking about these. I get like these bursts of homework from people. Like I don't hear from them for like a year, and all of a sudden they send me like 70 charts. And I think that's actually the wrong way to go about it, right? It's not how much you can do in one day. Anyone could sit down for a marathon, jacked up on some Starbucks or whatever your choice is. I think out west it's Dutch Brothers. But anyway, anyone could sit down for a day or two and go crazy, man. That's not how you become successful in the business. It's how much you can consistently do in 12 weeks time, and then you reset and you do it again. Okay, if you missed the first 12 weeks of the year, we're on like week 9 or 10. Okay, so reset and give yourself a 14-week cycle. Start now. You got to have some goals and stretch yourself just enough to get uncomfortable, right? What does that mean? Maybe cut out some calories, starve yourself on a diet, maybe mark 10 more charts than you thought you should. Just some way to make us feel uncomfortable. Look at a pair that you haven't looked at, something. And then as soon as you feel uncomfortable and it becomes comfortable, reset it, push it out a little bit further, man. The problem is with life and this business, and I've said it 100 times, is that courage is acquired backwards. And I never learned that until I jumped out of a window of a 30-floor building on a rope. Courage is backwards. I did not have the guts. If it was just men, I would say something different. If I did not have the guts to step out on that ledge and do it, man, I was scared to death. But once I did it and conquered it, I saw that it was easy. And then I did it again. And then I had the courage to do it and to show others how to do it. Then I had the courage to make a rescue mission and do stuff that is not normal. But the courage is built in reverse. You got to put yourself out there, get uncomfortable, and do it, and prove the model to yourself. And when you prove the model to yourself, you'll have the courage to ramp up lot sizes, to change, to trade more pairs, to hold for bigger targets. That's the only way, man. I wish there was another way, but I could sit here and draw on charts for you till I'm blue in the face and show you the most pristine setups on the planet. But until you push yourself, it's never going to materialize for you. You know, we have a lot of people with success in the group, but we have an equal number that's struggling quietly and afraid to talk to me for whatever reason. Afraid to send me a markup or send me their strings. They refuse to do it. And I understand, but listen, I've never shredded anybody publicly, and it's not how I do it, man. I'm here to help you guys. Okay, so some other ideas moving forward. Focus on more than one task, but only one task in a day. So what do I mean? Like maybe mix up your week. Monday, do some homework. Just say, okay, Monday, I'm going to mark charts. Because I know it gets boring sitting there marking charts. Believe me, I did it. Carr did it. Jim did it. Jim still does it. I just mark up the stuff that's going on that's relevant to me now. I don't mark up hundreds of charts like I used to. But that was part of the training. So maybe Monday, do some homework, and then Tuesday, screw around with a high-low drill. Wednesday, maybe mark out some projections for Thursday and Friday, and then actually make some observations Thursday and Friday. Put the levels where you think they're going to come in at, and then watch them, see if they come in, and if they do, trade them. The idea is to develop yourself as a complete trader, right? It's not enough just to be able to say, oh, I could read a chart. It's not enough to say I pulled the trigger on everything. You got to have a well-rounded approach in all areas of the business, and we know there's multiple facets to the business. You got to be a good analyzer. You got to be a good predictor. You got to pull the trigger. You got to manage your stop and your trade, and you got to manage your money. Then you got to manage the banking side of it, withdrawals and taking money out and not letting yourself ruin. But there's steps to this. There's layers. And the only way to do it is to get uncomfortable, reset, and get uncomfortable again. All right, for what it's worth, man. Here we are, wrapping it up. First quarter. Hard to believe it's almost over, right? So January, February, right? I was all here. We are sitting on the 9th, and we're looking at about 3.5 weeks to the end of the line, right? April 1st. So if you're in a situation where you haven't really accomplished what you set out to do, then what you need to do is maybe start your 12-week here, maybe on this Monday, and then you'll have yourself like what I guess a baker's dozen or whatever you want to call it. All right, so tonight I want to look at this one GBP chart that I took a screenshot for you to understand some stuff, and then we're going to look at Riskaroon and money management. I've been talking about that I was going to tease this stuff, or teasing it, that I was going to talk about it, got it backwards. And finally, I put the slideshow together for you guys to look at so you understand the backside of the business, managing your money properly. All right, so the GBP chart. This is the last couple days consolidation and the break higher today that happened. And there was some really good opportunity in here. A lot of people got it. And I love when you send me the charts that you nailed it. So if you remember what this is a profile. This is a weekly profile. This is over the last 3 days. And what I do on this chart is I color the pins the same color as the background, right? It's a pinless chart. It's just closes, opens and closes. So obviously when the background is painted different, you could see the pins, but the idea is the pins are the same color as the background, so they blend. So when price is outside of the profile, I could just see the bars, right? So, you know, I used to say this all the time when the market has a big drop, it's about to pop, right? So I want you to think about what happened. We know the GBP fell a long way in the last couple of days. And there was huge opportunity in there. The setups were there over and over and over again. And I'll bang those out next week. I'll show you some of them. They're epic. A lot of people got them. A lot of people were sending it in, telling me how awesome it was, and they see it and all that stuff. Makes me happy. So, right, if you look over here, this was one of the trades, by the way, right here. Right here it flipped. There's your 1-2 into the lows. Anyway, we'll go over them. Got them all marked up. Epic. All right, so look, you have to understand when you're looking at this chart, it's not just where you're going to take a trade. You have to understand what's going on, right? Everybody thinks it's a downtrend, right? When the dealers flat print for an entire day and a half, right? That's consolidation. Okay. We say the word consolidation, but you understand the meaning behind consolidation, right? They're consolidating what? Their books, consolidating their balance sheet. It's not, oh, the market's in consolidation, sideways, yeah, whatever. There's meaning behind it. Okay, why in the world would they have to consolidate? Well, they gotta figure out their net position, right? The bottom fell out of the market for 2 days. They're providing the liquidity for that, right? You're forgetting the story. They're market makers. They have to make a market or there's no business. So they have to provide liquidity at every level. And to do that, they have to put both positive and negative float out there, meaning against themselves. They have to trade against themselves essentially in order to make a market. But the idea is for them is to be net positive. So when the market drops for 2 or 3 days and they caught everybody off guard, they're selling into these positions and they're buying from people, right? And don't forget, buyers become sellers and it fuels the acceleration of the drop. What do you mean a buyer becomes a seller? If you are a buyer and you put a stop loss 30 pips out, 50 pips out, 150 pips out, and you have a stop, a hard stop, your order turns from buy to sell. So that fuels these drops. That's why I love the sell side. The sell side gets going. It's crazy, man. It's massive acceleration. So price drops in, goes into sideways print, consolidation for an entire day. Nothing here. Okay, now what? Well, think about Bookmap. Think about what's happening here. This is boxed up and pressed, right? There's pins all over the place on this, but this is what I want you to understand that what you're looking at. That the market is pressed here between levels and Bookmap. Do you need this stupid thing on the chart profile to understand that this is the point of control? This is the highest volume exchange for this period of time? Please tell me no, you don't. Look, they kept the market here for more than 24 hours. That should let you know, right? It ended the day here, continued for 24 hours, and then pushed about half a session. 30 hours plus, 40 hours, market was in sideways movement. The dealers were assessing their net position, accumulating. They're making the market and seeing where they stand. But we know that after a huge drop, the market's got to pop. I said this stupid thing 11, 10, 20 years ago. I don't even know. You guys make fun of me, my little sayings, but if there's a big drop, the market's got to pop. When there's a big rise, the market needs more guys, right? Those sayings, right out of my class. Okay, so in order to flip the book, they got to get above this boxed in area, right? And we know that this turned over, retested, and went higher today. When you see a sideways print like this, you got to figure out where price came from and read the chart for what it is, right? It's not, oh, the trend is down, they're going to continue down. They could just as easily do that depending on conditions, what's going on in the world. We know there's some stuff going on. And by the way, I hope anyone that got hung up on this war breaking out was holding over the weekend. I hope you finally learned your lesson. There were some people that wrote me in that had some small positions on and kept it over the weekend and they paid. So do not hold over the weekend ever. You cannot control what happens in this world. You only can control what happens in your world. And the way you control that is to be flat on Friday. All right. So I hope everyone saw this and took advantage of it today. This is a 15-minute or 30-minute chart. That's what profile calls for, is 30-minute. And I like to erase the pin so you can see how it boxes out. But we know in order to get this, you had to have your stripes in the book. They pressed it, right? They tried to break here and got smashed back in, right? But coming off the lows after a big drop, you know the market's going to pop. We're looking for upside, right? You could start putting fibs to it and all that other crap, but just trade what you see, man. Right? You could say, oh, 50% retracement into the highs coming off of 2 days. So you would take 180R, right? You could add 180R to here, and that might be your 50% retracement roughly, even though it was an excessive move somewhere up in here, right? You're going to get your move. Or you can look for a higher level consolidation where they might lean on. There's several ways to look at it. But the thing is, bottom line, look for the flip, look for the signals. And the signals are this, right? Finger roll, whatever you want to call it, airspace. Need to have an A frame or V frame. Going up, you need an A frame, right? And then you could actually, let me erase this. You could actually get a little more technical. That was no good. Sorry, man. All right, let's see. Here we go. Spray can. Let me get the back. All right, so you start boxing these areas up, right? So when it breaks higher, you're looking for it to roll back in, right? On the lower time frame, it gives you a clean one. You get your 1-2 print, price goes higher. Trading off the lows, you could just start boxing these up and understand there's a hole in the book, jumps over, pulls back, higher price, right? Hole in the book, jumps over, pulls back, higher price. Look for a couple of days or 3 pushes, right? And we know, some of you remember this, some of you don't, but when you're dropping in the trend, right, 3 levels, trend, counter trend is 1, 2, or that ABC pullback, right? ABCD. And then you could take a measured move off of the ADR and get your move back here. There's a million different ways to skin this cat, but I just want you to understand that when you get a sideways print for more than 24 hours, market's going to pop higher if it dropped. And if the market was rising and you get a flat print, bottom's going to fall out. And they might even intimate by throwing a fake pin, right? They could have faked you out downside long to give you, you know, the Dave Minush theory of lower price, and then they reverse. I don't know if you're here, brother. I love you. Anyway, I hope you guys see it. You don't need this profile to understand what's going on. If price consolidates for more than 24 hours, that's the point of control. Why? The dealers are settling their books. They're consolidating. What are they consolidating? The market? No, they're consolidating their sheets, man. Consolidating their books. That's what consolidation means. It doesn't mean, oh, the market's sideways. It means that the dealers are settling, man. They can't have a ridiculous amount of open flow. They can't carry it. They got to settle too. So keep that in mind when you're looking at this stuff. All right. Let's talk about risk of ruin. So I'm going to cover risk of ruin spreadsheet, and that's going to wrap it up tonight. So question, how many trades do you think you could take before you completely destroy your account? What's your number? Does anybody know? Of course, providing that you don't lift your stop or over leverage, right? Sean knows his number. Okay, take a guess, somebody else besides the usual. Okay, good guess. All right, well, there's actually a spreadsheet that we have to give you the actual number where you're at, right? So what factors determine how long you can last in the business, right? Before you ruin it, what's the factors? Think about it. Your starting capital, right? Your ability to refill your account, which I'm totally against. Your percentage of risk per trade. Are you trading 5%, 1%, 2%? Are you using a fixed stop versus dynamic stop? Is your stop different every time? And then this is the last one is huge. Your ability to take the hit without lifting it, right? Your ability to take the stop out, move on to the next trade, and get on with your life. That seems to be the biggest problem that I see, is that people can't stand to be wrong. Yep, there was a comment that the hardest part about taking the hit is the psychology. But the thing is that it's the psychology of taking the hit. The problem is you're putting too much weight on one trade, and that's the one trade theory. One trade doesn't make or break a career. One trade doesn't define you as a trader. You got to be able to bounce back from the losses, right? And it's not a loss if you win the day. If you're growing your equity, like if you shift your focus from I got to win this trade to I got to grow my equity, then that's the psychology. The psychology is that if I'm protecting myself, going 6 for 10 with 2 to 1 or 1, and I'm not letting those get out of hand. That's how you burn an account. I've done it. Everyone's done it. It's part of the curve. So what happens? You lift your stop because you can't stand to be wrong. But the thing is, if you work the math proves out. And that's the thing, right? If your stops are 50 or 40 and you're only taking 35, then okay, that math is not sustainable. 100%. The math is not sustainable. You got to figure out some way to adjust your stop and your take to where at least 1 for 1, and really it needs to be 2 to 1. And that takes time and working the plan, right? So starting capital, some people come in with 5,000, some people start with 500 and trade micros and they get carried away. This is part of the problem. The thing is now is that you have funding opportunities available that were never available to me, man. I banged up credit cards in a HELOC. I'm talking a long time ago. Somebody don't even know I don't even think it was called a HELOC back then. All right, so look, this is a risk of ruin sheet. It tells you what your number is, where you're at, what it's going to take for you to be wrong. It's actually hard to burn your account. If you lose that many trades in a row, then I'm failing you as an instructor, man. So look, let's just say for argument's sake, $10,000 account, 2% risk, minimum risk is going to be $100. Okay, where do you hit the $5,000 threshold, right? Let's say right about here. Okay, that's 34. Let's go down to 34 over here. 34 is 5,100. So trade 36. You gotta, if you're controlling your risk at 2%, you got to lose 36 times in a row. I would hope that after 26 times or 16 times in a row, you would reevaluate and give me a call or drop me a line. You understand? If you go 16 in a row wrong, you're doing it. You're doing something. You're doing it wrong, right? For the Michael Keaton movie, Mr. Mom, you're doing it wrong. Something else is up, right? If you go 16 in a row wrong, you should just take the opposite of everything you think. I'm kidding. All right, so 36 trades puts you at 50% equity. And right around, I don't know, 90 trades, 89, 90 trades takes you to 0. That's a lot of trades wrong in a row. So if you stick to strict money management, it's very difficult to actually burn your stuff. The problem is that, and I've seen when people are reluctant to send me their strings, I already know what happened. Because then when I finally tell them, look, I'm not going to bust your chops, just send me your strings. When they send me the strings, I see all these I see like a normal, like an M setup, and I see like a nice normal trade over here, and everything looks great. Then all of a sudden I see one here, one over here, one at my house, one over there in the car, and I'm like, oh my God, what did they do? They couldn't take this hit. They lifted the stop and they just started adding shit in. And that's what happens. And that's how you go from a straight drop curve and bust your account in one cycle. And I'm laughing about it. It's funny, but it's not, because if it's your real money, it hurts, man, especially if it took you a while to save it up. But it's one of the most common things that I've seen is that the inability to take the hit. And someone mentioned that it's the psychology behind it, but the problem is that I think you're associating the psychology the wrong way. It's not about I'm wrong, I'm a loser. That's not what it is. It's I'm preserving my equity for the next trade. And I think as soon as you can get your head around that idea, if you have to use it as a mantra and repeat it to yourself, that take the hit and protect my right, stay away, live the trade another day. Hold on a second. Sorry, man. I'm a little congested. Bear with me, man. If I start coughing, I want to mute the mic. You guys don't need to hear that nonsense. Anyway, so the mentality has to shift from I'm a loser, I didn't get it right, to I'm protecting my equity and I'm looking for the next opportunity. You have to mentally make that shift in order to survive in this business. Right? And it's reverse courage. As soon as you prove out a spreadsheet model or prove out a trading model that where you win the day, you take 3 trades a day, you're looking for the cycle. When you win the day, you stop and you come back the next day. The problem is when people lose or have a losing day, they keep pushing it and they end up staying for a session they don't trade. They look at pairs they don't take and they turn it into a monster disaster. Instead of just being calm and realizing that, right? This chart here, very little opportunity right here. But then you come back, the opportunity's here and the opportunity was here. So if you have 2 really good days and you start seeing a sideways print, that's it. Take the day off, man. I've always talked about this. If you have a couple of bang up days where there's several hundred pips available for the taking, 2 days in a row on a monster drop, 3 days in a row on a monster drop, then you know they got to reset the books, man. So for you to get in there and start pushing and trading that chop, that's how you get yourself in trouble. I'll drop the sheet in Skype, or I'll have my assistant drop it in Skype in the next 24 hours. All right. So where are we at? Okay. We're looking at the sheet. Okay. So the next sheet. All right. So we were looking at a $10,000 account. Now I want to look at a $5,000 account, right? Same type of curve. $5,000 account, 2% risk, $100 the minimum risk on this type of trade. And this one gives you, because the risk is fixed at 100, because that's the minimum amount, right? This gives you about a 67, right? And 2,500 would be your break, about 25, 30 trades, where you're about halfway through your equity. All right, so a couple of questions. How do you change the slope of the curve? How do you make it steeper? How do you make it flatter? Right? You adjust the risk. Right? You change the percentage, right? So if you adjust to 1.5% or 0.5%, half of a percent, the curve's going to change, right? So here's 7% risk. Look what happens. And people are like, oh, Steve, I would never do that. Well, when you lift your stop and add to your trade, you go way higher than 7%. Because then what happens is if you got a $10,000 account and you bust that account open, then your risk was $10,000. So it's not like I'm crazy. Move this number over to here. That's your risk. Trade without a stop. Third trade in, your risk is 8,800. Think about that for a minute. I know you don't want to do that deliberately. And you know, MT4 is the worst about allowing zero margin call, right? They wait till you burn every penny and then they take it. And it's possible to have a negative balance. Some dealers say if you go negative, they flatten you out and they just take all your equity. You're done. But you know, there's front side margin, all that stuff. That's another day's lesson. Front side margin that ties up the contract, and then usable margin on the back side. And if you go to zero, they liquidate your contract. Some of them have 25% call out, meaning that if you have $10,000, when your account hits 2,500, they call you to zero and sell the contract, and they put the money from the front side of the contract back in your account, and you have a little bit left. But if you got 500 to 1 or 1,000 to 1 leverage, it's a couple $100 to hold the contract. But if you're trading futures or other instruments, the front side margin's more money. I know you guys know this stuff, but it bears repeating. So keeping in mind that when you lift your stop, you're essentially doing this. You're changing your curve to pretty much a cliff. It's just a mental shift, and I don't know how to get you guys to make the shift. But I noticed a lot, people are struggling with this, and when I get the strings, I see exactly what happened. So if you have a $10,000 account and a $5,000 account, how do you get the same curve in both accounts? Right? Anybody? If you trade 1% risk in the $10,000 account and 2% risk in the $5,000 account, the equity curves are equal. or the risk of ruin curve is equal. But the $10,000 account will last you longer. You will double the amount of time it takes to ruin it, to hit ruin. It's just math, man. And you know, I don't know how to explain it other than it's just math, but it sounds so simple. It's just math. Everything is numbers. Everything, you're in a numbers business. If you don't understand the numbers, you're in the wrong business. You need to go take a math class. All right. I know they don't teach this crap in school, and they should, but it's just basic math. If you control the risk and trade at least 2 to 1, take a 20 take profit and 10 pip stop, and you can go 50, 60%, you'll make money. Oh, Steve, 50, 60%, 6 out of 10, that destroys my ego. I can't deal with that. Maybe you can't deal with it, but you know what? If you qualify for a $100,000 combine account and start taking $10,000 checks, maybe you can. Maybe you can get your head around that, especially if it's not your money at risk. I'm a huge fan of this funding stuff that's going on, man. I think it's an opportunity that, like, unprecedented. I know there's some shitty companies out there and they actually cheat, but I know there's a handful of good ones. You know, I know on the future side, they're running a really good one. I know the guys that started it, they're good people, man. And I know people are getting paid. Absolute fact, people are getting paid. All right, so whatever. You find your spot. I don't promote other people's companies, you know, because as soon as I say one, it'll be the worst one on the planet and go out of business. And I don't want that on my head, man. Do your own research, find a place. And the good news about that is that you can kind of treat it like demo and be a little more carefree. And if you can do that because they're bearing all the risk, then you should be able to trade like a beast. It's when you get inside your own head and you can't take a loss and you move the stop and you think it's going to come back that it doesn't. And that's where you got to draw the line in the sand and figure out, right? They said, what is it? Separate the men from the boys, the girls from the ladies, or is it the ladies from the women? I don't know. You know what I mean? But it starts here. It starts here with understanding what it takes to ruin your account. It's harder than it looks, right? Unless you move it. This is hard, man. Well, this is easy. It's hard to lose that many trades in a row, man. If you can't hit a reasonable number out of 20 trades, 12 out of 20, 2 to 1 risk to reward, that's a moneymaker. 10 out of 20, 2 to 1, 3 to 1, that's a moneymaker. Sounds crazy, but it's a moneymaker. Then the idea from there is to ramp up. All right. Just said all this. Win-loss is tied to your ego. Does not determine your self-worth as a person or as a trader. You can lose a trade. You can lose 5 trades. And I'm going to show you how the numbers flesh out on the spreadsheet. The problem is that society, man, from kindergarten, you get an A on your homework assignment. You didn't get any wrong. They teach you that you have to be perfect. You have to make 100%. So we carry that 100% mentality into the trading industry, and it just doesn't fit. It's the wrong mentality. Right? Your ability to push through and master this skill set says more about you as a person than your win-loss. It's you're earning equity, taking a check. That's the bottom line. And again, using a funding company doesn't matter. It's their money. They're taking all the risk. The only way to determine your worth in this business is your ability to grow equity, fend off the losses and keep executing, and understanding the bigger picture, which is return on capital employed. You're borrowing $100,000 from one of the challenges, essentially, right? Then your job is to return 10%. That's 10 grand. You make 8, roughly, right? It's like 80-20 payout on these. I don't know, 78, 70-30, whatever. Okay, never over leveraged, and never should be in an all or nothing trade scenario. You should not have 100 grand on the line and you take 50 lots and no stop, and you're either going to get it or you're going to bust it. That's insane. It's stupid. And that's the thing that people do without realizing they're doing it, because their emotions get the best of them. That's what all this planning and mapping and headbanding is about, is getting yourself in a situation where you map out what you're supposed to do, and having a sheet. Okay, if I take 10 trades this week and I go 6 out of 10, this is what the numbers will look like. If I take 4 hits, a scratch, this is what my numbers will look like. And this is where the spreadsheet comes in. This is the stuff that we're gonna cover now. All right, so always judge yourself in 10 trade blocks. I've talked about this. Right, risk to reward, RVR. Ability to stick to your rules. This seems to be the biggest stickler, man. And it's easier for military guys and police and fire. It's easier because that's the job, right? You can't violate protocol. You're held accountable at a different standard than the civilians or public, right? And understanding the greater good, the psychology part. The greater good is return on equity, not, oh, I lost a trade or 2 trades or 3 trades this week, right? And the only way, understanding the greater good, right? What is that? Preserve your capital. Protect your equity by taking it out. If you're using a funding company and there's a check, take it. Take your check. Don't leave it in and keep trading. Right? I know some people are qualifying and then not trading, and that is like, it goes against my religion. But you do what works for you. But if you have $100,000 usable capital or $500,000 usable capital from these guys, and you take 3 trades and then sit there for a month and do nothing, shame on you. You got to grow yourself as a trader where you're executing good setups and growing the account. That's how you break the tether and you get free from them and free in your life, by putting the capital to work. I've heard a lot of stories of people taking 3 trades and they do nothing and wait to get their check or wait to qualify. That's okay if that works for you, but you can't take 3 trades out of 30 days and think you're going to make a living in the business. You got to employ the capital. You got to go to work. All right. Okay, so this is the greatest tool I'm ever going to give you in your life, but it's not being used. I mention it every single cycle in book club. I have not missed mentioning it. I've taught variations and improvements on it. I mapped out it on the whiteboard at least 3 times. Those videos are floating around somewhere if they didn't get lost or archived. And I've placed it in the chat too many times to remember. And it's the spreadsheet, man. So there's 3 facets to success in the market. We know it's the trade entry, right? What triggers you're using to get in. It's your trade management, how you handle the move while you're in it, when you move to break even, how you handle your risk. And then, of course, there's money management, how you calculate your risk, your size, growth of your account, how you scale. And number 3 is probably equally as important as everything else, but it's rarely understood and more often than not ignored by the group. It's just everybody sends me and they're taking the same lot size over and over and over again. And it's when you start playing with this thing and understand what it is, it's an amazing tool. I didn't write it. I've made some variations. I came up with a 3-bet. Some of you guys know about that. It's for smaller accounts, 3-bet 50. I'll cover that stuff in the coming weeks, man. So fractional money management spreadsheet tells you exactly what lot size is required to maximize your available equity. Manages your risk and your drawdown. If you follow it in times of loss, it'll change the equity curve. It'll change the equity curve on ruin. It'll change the ruin curve. It'll flatten it. It stretches it out into the future. Right? This allows for the highest possible growth and basically what we know is compounding without some made up formula. Okay. So everything that we do in this business, I've been telling you this, is 10 blocks, right? 10 trade blocks. Everything's in a block. We do 3 blocks, 30 trades, 3 blocks of 10, right? You go 7 out of 10, 6 out of 10. I'm going to show you some examples of how the spreadsheet plays out. We're going to start with a $5,000 equity or risk per trade. It's a 2.5 R system. What does that mean? You're taking 2.5 the risk, right? So for one risk unit, your reward is 2.5. It's a single setup, 10 pip stop, 25 pip take profit. Okay, that's what we're talking about. So that's how this works out. So you take the spreadsheet, you put your starting balance, 5,000 bucks, 2% risk, right? 10, 25. This 2% thing was taught to me a long time ago, and it's the industry standard. And you know, when I read those reasons that people are tapping out in or failing those challenges, you remember a couple of slideshows back, I left a slide in there last week or 2 weeks ago rather. It was showing that those traders that are successful risk about 2%. You know, I know some people with smaller accounts want more action faster, but that's what the spreadsheet does. You don't need to risk more than 2%. You need to use the spreadsheet and change your lot size. Okay, if you're trading a smaller account, obviously you're going to trade mini lots, right? Mini lots traded, right, would be 10, which is one standard, and you change that lot size as you move up, right? 3 trades, 3 trades, 3 trades. You notice that the lots go from 10 all the way to 16 in a 10 block trade. So you literally went 60% higher within a 10 trade block, right? You're trading, your size went 60% higher. As your account grew in equity, you're increasing your lot size. Most people would just trade one mini all the way across, and they would make 250 per trade instead of the opportunity to make 387 on a win. This is the stuff that, it's the intangibles, man. It's the backside of the stuff. Maybe you're making great entries, but you're not using money management. Maybe you're making great entries, but your stop is too big. This is the backside of the business. You have to understand this and employ this stuff, period. It's all, I guess, what, symbiotic. They all have to work together to get you to the next level. Okay, so in this example, let's say that 4 full stops were triggered. You got stopped out 4 times in the 10 block. 2 trades did not hit their full TP. Trailed out, missed the limit, right? So you basically went 4 out of 10 trades were successful. That means 4 out of the 10 that you took went to TP. Okay, that's a lot of people are doing way better than that in the group. But the idea is to understand that trading at this level is still 20% return on the account's achievable, right? So let's look at the numbers. All right, $5,000 I talked about, 6 out of 10, 2 missed targets. The ROI was 20% return on the account. Okay, look at the numbers. You started 5,000 bucks, you showed up on your terminal Monday, bam, right to stop out. You hit 1, you hit 2, you scratched on 3, you didn't get full TP, you lost, you went TP, you lost, you went TP, you lost, you scratched. That's 4 out of 10. 2 missed targets. All right, and you still managed to grow the account from 5,000 to 6,005, which is a 20% return on your equity. If that was 50,000, it would have been $10,000 return. It's not too terrible, especially if you're using qualified money. Those numbers are doable. You understand? All you do is take the spreadsheet, plug these numbers in, and start playing with it. These numbers are the only ones that are changeable, and it spits out a fixed. Spits out your fixed goals. All right, and then this tells you your risk, and you're using 10 pip stop or 15 pip stop. You start playing with this over the next couple of days, I promise you, it's a game changer. All right, if you're trading minis, just make sure that you can take fractional size lots. If you're trading standards, maybe drop down to minis so you can take fractional size. All right. Some of you might think, hey, that was a bad week, man. I went 40%. Can you have a bad week 4 times in a row? Can you do 4 bad weeks like that? That's an 80% return on investment. Think about that. Can you do that for 10 months out of the year? Non-compounded, resetting every month, that's 800% return. See what I'm saying? You're making it too hard. I'm getting these letters and people are making this too hard. You don't have to go 9 out of 10. You have to use money management, the spreadsheet, and put all facets of the business together. Be able to take the hit, but return on equity. Take the stop out because you're going to survive risk of ruin and you're going to make it to the next trade and the next setup. Okay, ask yourself this. How many times have you sat in front of the machine and had a shitty day, right? Everyone raise your hand, me, everyone. Okay, now you have a shitty day and you sit there and you keep pushing, right? But you understand that trading has a time horizon. Hold on a second. All right, man, sorry, coughing fit. All right, I'm back. Okay, so look, trading has a time horizon. And here's how the time horizon works. Let's just say, for argument's sake, London Open, end of the blue box, right? That's the beginning of your time horizon. Your opportunities are here, and then we get the next box, the red box. If you're pissed off and you're seeing red, literally, right, on this side of the chart, you need to be out of here and done. You need to get yourself out of there. Your time horizon, the most opportunity is between the London box, the 9/30 open for the U.S. markets. That's your time horizon. The longer you stay, right? So you got your W formation, your zone flip, right? This is pristine opportunity one. Flat print, another hit, pristine opportunity number two. From here, it starts to degrade. Why? Well, level two gives about a 50% pullback. You may or may not get that. You're looking for the best one or two opportunities at the beginning of the day. The longer you sit in front of the machine pissed off, your time horizon starts to degrade. So the London Open is 0 and your time horizon starts to tank the longer you sit there. So if you sit here mad, let's say you missed a couple of good setups during the pristine time, the conditions have degraded. There's no more, the opportunity is not the same as it was in the zero hour. The opportunity starts to degrade. So as the opportunity is degrading, you're pissed off and you're pushing and you're losing more and more, and it's creating this cycle of where you're just throwing money away and blowing your equity. The thing to do is to have a loss limit for the day, either in numbers or in blocks of trade, right? We talked about 3-block, 5-block model. If you make your 5 trades and you're done and you didn't turn a profit, then you need to tap out. And by the way, I think the 3-block is better. You take your 3 opportunities for the day, and then if you tap out, it's over. If you hit your 3, you 2 for 1, 1 for 3, whatever the numbers are. We talked about this before. This was another presentation a few weeks back. Then that's it. Conditions won't degrade. You have 2 or 3 opportunities. If you're trading 3 pairs, you look for 1 opportunity in each pair. There's your 3. You book those, win or lose, and that's it. Your time horizon's over. You tap out. Your office hours should be about a 4 to 6 hour window, man. And if you don't get anything, if you wait and you're in some and you take something in hour 6, then your time horizon's expired. The hour 6 is for you to manage something that you're in. Right? Your office hours need to be 1 to 6 a.m. or 1 to 7 a.m. And if you're in something mid-session, then you want to carry it through to see if it goes to take profit. That's different. But you shouldn't be pissed off at what happened here and then fishing for trades in hour 6 and hour 7. And then that turns it into noon, 1 o'clock before you get out of there. It's self-management, money management. It's so many facets, man, to the business. But you got to be aware of all of them. If you got a bad temper or you're hot-headed, and everyone knows their own situation, you got to work on that. I can't help you with that. I could show you the perfect setup still, I'm blue in the face, but if you're hot-headed and you can't control your emotions, I can't help you. I know who is in the group and who isn't. I already know by the way they write me an email and the way they talk to me. I already know who's like that. And the first thing I tell them is you got to get a hold of that temper, man. I know there's some other platforms out there. You guys know I'm a fan of NinjaTrader. I know there's some other platforms. Years ago, I thought of it'd be great to have a platform that shuts you down after so many trades or so much loss. Like it just blacks your screen out. You can't take anymore. Locks your equity up for 24 hours till you come back to the next day. And I think I heard that that's possible on some TradingView stuff. I don't really know. I don't use it. But if it's available and you have a hot head and you can't handle yourself, that might be a place for you to start. You put in your max drawdown for the day, you put in your risk, and you put in your hours, and the machine should shut itself down if you violate that. You know, I know some people are saying it'd be great. I think there should be a platform that you preset the parameters, that you know your risk for the day, you know your opportunity window, and when that window closes and the risk is win, lose, or draw, machine shuts you down. You can't take anymore. Just blacks you out. I don't know if it exists. I thought about it years ago, but dealers don't want that. Nobody's going to sponsor that. That's got to be a third-party add-on. I don't know. Let me ask around a little more. Someone mentioned something to me like that, because I mentioned the idea of this platform that would your max risk can be 2% per trade. You can't take any more, can't take any less. Automatically scales to 2%. And then at the time horizon close at 6 a.m., you're out. You have, like, I don't know, maybe an alarm that goes off. And if you're in something and you're in profit, then it'll let you finish the completion. But if you're not in anything, you can't execute anymore. You know, I have ideas for it, but no dealer is going to sponsor it. I guarantee you that, because they want your account. All right, so spreadsheet. I'm getting behind. Okay, so the next example is $25,000 starting capital, 1.5% risk, 2R system. The other one was a 2.5. This is 2R. So it means you're going to use a 20 pip stop, 40 pip take profit. This is more realistic for a lot of people in the group right now. And you're a 60% trader, let's say, 6 out of 10. All right, let's look at what the spreadsheet would give you. All right, you come over to the spreadsheet, mind in your business, you plug in your 25 grand, 1.5% risk, 20 and 40, just like I said, right? So here you go. You're going to be trading, your pip goal is 40, right? You're trading 19 mini lots, and you scale all the way up to 24 on the first 10 block. Okay, let's look at it. So let's say you went 6 out of 10, no scratches. All right, I plugged them in. You went, first one was a win, second one was a win, loss, loss, win, win, loss, win, loss, win. That's a realistic amount of trading activity. That's over the course of a week, right? Okay, over the course of a week, following the spreadsheet, you went from 25,000 to 27,982, going 6 out of 10, right? It's $2,982. 5 trades out of the 10 hit the target. 1 trade trailed out. 4 trades were stopped out. Just under 12% return on equity. 11.95%. 4 weeks of trading like crappy like that. 47.8% return on capital. You understand? Okay. So what's wrong with you? Nothing's wrong with you. You just have to change your mindset. You have to get out of the I can't lose a trade to I can't lose my equity. I have to go 6 out of 10, 7 out of 10 for the week, 5 out of 10 for the week if I'm trading 2.5R or higher. Right? And it's really a failure to truly understand the math. No one really does the math. They just go, oh, just take a bunch of trades, man. Okay, you could be very systematic in your approach and shoot for 10 trades a week and follow those 10 blocks of stuff, or take 3 trades a day, 4 days a week. You're looking at 12 trades, and then you plug those numbers in to see how it works out, man. Right? The biggest problem is being afraid to take the loss. It's an inability to accept the risk because it's money. And man, that comes from childhood stuff, emotions. I talked about this before in the meetups live and stuff. I grew up with the same shit, man. Everybody grew up with. My dad bitching about the lights being on, the electric, the door open with the air conditioner running in the summer. You guys know what I'm talking about. If you grew up middle class or lower, you know exactly what I'm talking about. That stuff does not make you a trader. It is counterproductive for the way we grew up, man. And if you're a little bit older, money was tighter, I think, in like 70s and 80s, and things were different. You know, we were ignorant about electric bills and solar, and that stuff didn't exist. And my dad, man, you know, I grew up in New York. We had wall bangers. Those things were expensive to run. Never heard the end of it. There was no efficiency and efficiency rating and all that garbage. This shit was on running 24/7, and it was just cold air like a refrigerator blowing in your house. And if you opened the door and the shit escaped, my dad was pissed. You know what I mean? It's funny, but it's not. You know, if you ever had your lights turned off a couple days before payday, you know what I'm talking about. If you were eating like some rice cakes or peanut butter bendies on a Thursday, waiting for your father or your family to get paid, you know what I'm talking about. That shit takes its toll on you in this business. And I can't help you with that. You got to put that aside and figure it out. But it's part of it. It's part of the problem why you can't take a loss, because it's money. You can't lose money. I'm a fan of Susie Orman. Used to be. I haven't watched her in a long time. But she tells a story about a fire in the store. I don't remember the exact details. A vendor, a guy owned the store, convenience store, and there was a fire in there, and he ran in there and grabbed the cash register, and he burned his hands up and everything, like first or second degree burns on his hand in front of his kids, and they were like, "Why did you go back in there for that?" Right? Because that money was more important than his own life. He couldn't afford to lose that money, so he went in there, risked his life, and burned his hands to grab a steel cash register that was overheated on fire and got blisters and burns all over his hands because that money was more important than oxygen. Right? That's the mentality. If you grew up with that mentality, this trading business is tough for you, and you got to break through that stuff. Right? And there's other issues. You move or lift your stop. You've not found your trade yet. Still screwing around. Lack of effort. Homework, and you don't want to do it. Can't find your style. Can't find your spot. Right? I did something where you talk about how many songs do you remember? Hundreds and hundreds of songs I could sing the lyrics to. You haven't found one that sings to you. You haven't found your spot. Right? You haven't adjusted yourself to greater than 1.5 RVR to 2 to 1. You haven't done that yet. Right? Some people are still screwing around with 1 hour trades, and that's okay. You got to start there. 100%. It's in my class. You got to be able to take 10 and risk 10. If you can't do that, how are you going to get to 20 and 10, 30 and 10? You're not. So you got to start somewhere, build your confidence, and then start real money. And this demo thing is, I always talk about demo. Get out of demo as soon as possible, man. I'd rather see you trade a couple $100 in an account with micros than trade demo. Demo's bullshit. The liquidity's unlimited. You get filled on every order. You never get slipped. It's BS. All right, it's 8. I don't know what else I got. A couple more slides. Okay, so a solution for this. Go back through your trade history, apply the spreadsheet, see the difference that it makes. If you're right around break even or slightly below or slightly above, you should put your trades into the spreadsheet. I promise you it's going to show you a profit, and you're going to be like, damn it, I should have been using this all along. And if you're on the fence or you're not sure, start using it. The sheet doesn't care who you follow, man. You follow me, you follow flips, you follow lower time frames with Jim, you follow bounce trades with Carr. Spreadsheet don't give a shit. Doesn't care. Plug it in. The numbers are the numbers. But I promise you, it's absolutely going to change the outcome and your ability to earn in the business. Okay, and the variations that I published, I mentioned a weekly lot adjustment. Change your lot on the first of every week. Right? It's a little slower, but maybe it's a way to get you acclimated. And then 3-bet, 50, different styles. All right, I'm going to end it here, man. It's 8 o'clock. My throat's killing me, but I pushed through for you guys, and I will be back next week, hopefully better and stronger. Listen, this is coming from a good place, man. I love you guys. I appreciate you. I know some of you are struggling, and I'm here for you, man. I want you to find your spot, but this is part of finding your spot. You got to manage the money that you're using properly in order to capitalize on this business. All right, I appreciate you guys. See you next week. Good night.